Hello guys, fairbinaryoptions.com here. This is 11th of January, it is Saturday, but during the weekend we are preparing the ground for trading next week. You know that all the week last week we bought call options on both Euro Great Britain Pound and Euro US Dollar. If you go on our official YouTube channel and check the recordings that we've made, all the time we suggested end of week expiration date, end of week expiration date. Now end of week was yesterday, Friday, and as you can see, Euro US Dollar closed at 36.66, so basically way above the highs for all over this week, and therefore all our options expired in the money. Now we only bought call options, and when you buy call options, you are looking for price at the expiration date to be bigger than the striking price, and therefore your option will expire in the money. The majority of the brokers that we are analyzing here are offering returns for something like 70%, 75, 80%, 88% like lionhive.com. So that would imply a nice return on our options. Now, if the euro dollar move is done here, what we should expect next? Well, the purpose of this recording is to study the structure of the move that started from the lows here. So let me put our logo a bit lower. The move that started from the lows here, and we are looking for it to go to the upside, and therefore from this moment on, if I were to label this move, I would say that this one here would be the beginning of the first wave. So I would say that this is one, and then a second wave, and then price going to the upside. So let's try to label it here. So this to be the first wave, like this. Of course, at any first wave needs to be corrected with a second wave here. This second wave most likely looks to be something like either a double three running or an irregular correction for the whole pattern, or maybe even a zigzag. So this to be 1, 2, and then the 3. It remains to be seen. We have the key on the Fibonacci expansion. So let's say if this is the first wave that ended there, like this, with the fifth wave failure, then the third wave needs to be more than 161.8, and that would be one scenario that we have. So 1, 2, looking for a third wave, an extended one, and then of course looking for a fourth wave, and then we need a 5-wave structure for the fifth wave to come. But in order for this to be considered an impulsive move, we have two possibilities. The first possibility is that the fifth wave, that the whole 1, 2, 3, 4, 5 to be third wave extension, and that means that the fifth wave should not be longer or bigger than 61.8 when compared with the length of the third wave. So fifth wave should go, by the time this triangle closes, let's say that it will be around here. So the fifth wave, the maximum value for the fifth wave should be, let's take a horizontal line, and it should be 137.33. That would be the maximum value for the fifth wave if we have a third wave extension. If on the other hand we have another situation, and that is being called with the first wave to be here. So let's say that if the first wave is here, let's clone this one, let's put it here, let's make it of a different color, and let's put it blue, for example. So if the first wave is done here, and then the second wave will have it here, like this. And basically, if you take a Fibonacci expansion in this moment of time, and we go from the lows of the first wave till the end of the first wave and till the second wave there, you see that 161.8 comes exactly here. Now this is exactly the same outcome, so it doesn't really matter if the first wave is done here or here. We still have an impulsive move, and we still have an extended wave for this third wave. So 1, 2, 3, 1, 2, 3 to the upside, And what next? Now we're looking for a fourth wave. Now, the problem with this fifth wave here is the fact that let's say that this is the maximum that the fifth wave can have. So we will see if price goes bigger than 37.33, then I would say that we are looking for a fifth wave extension, and that means price should go 161.8 when compared with the third wave. So way higher values should come. Or on the other hand, I mean, this would be most likely, as price depends very much on the price section on Monday, because this looks like a pennant. You see here, this looks like a pennant. Now a pennant has a measure move, meaning that price should travel this distance by the moment it is being broken. So if we have a pennant to the upside that exceeds 37.33, then I would say that we'll have a fifth wave extension out of that degree. It remains to be seen. What I tried to show you with this move is that, with this recording, is that Euro-USD is still bullish going into next week. So regardless what is going to do here, price should still go to the upside. Therefore, what we recommend here on fairbinaryoptions.com is that buying call options would be the logical thing to do. But again, with end of week expiration date, end of next week's expiration date, so basically for Friday, next Friday at 21 GMT, as market normally should not look back on such a move for some time to come. Now it remains to be seen. Thank you very much for being here. Again, this is fairbinaryoptions.com, and all these analyses are possible due to the help of our general sponsor here, or official sponsor if you want, Lionite. So make sure you are checking lionite.com and see the offers and recommendations there too. Bye bye.